Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about a very interesting company, Huhtamaki Papers, for which a lot of requests had come in. So let's understand how the business is doing and what you should do in the stock. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Huhtamaki Papers was established in 1935, so a very age-old company of around over 80 years, 84 years ago it was established, and they provide packaging products. Before this, in the earlier years of its establishment, this was purely a paper making company which was making papers and exporting it. Later on it started exporting after 15-20 years of its establishment, but currently they provide packaging paper materials for FMCG companies as well as healthcare and so on and so forth. Many industry they serve, so it relates to food, beverages, healthcare, sports, utilities, and so on and so forth. So it is a huge brand in packaging, Huhtamaki Papers, and they have leadership in this domain. They currently serve different countries as well in Middle East, East Asian nations, Africa, Australia, New Zealand, and all across America. So North, South, and Central America, they have their bases. It is not clear whether they have a clear base in US or not, but they currently serve multiple nations across the globe. So it is more a consumer play rather than, if you can look at it as a paper play. So one needs to understand that. So you have to take this company as more a consumer company rather than a paper company. If you look at the financials of the company, the sales have grown by 7.5%, and the profit growth has been exceptional because they had a loss of around 15 crores uh, about a year back in the same quarter, and but currently they have gone with a profit of around 32 crores. They had raw material cost which was lower, and the interest cost was also halved during this period, and this is why the profit has come in so much higher. The dividend payout ratio has been very good at around 3.5% is the dividend yield at the moment, and it is pretty good to consider as it is a small cap company. Although the return ratios are nothing home to write home about, nothing good to write home about at 6%, and operating profit margin of only 11%. But what has been the reasons for the up move? Results have been outstanding for the last 2 to 3 quarters, and due to which the stock has been moving up continuously and currently trading at 250 odd rupees. And its 52-week high is just about 12-13% higher from these levels. It is a debt-free company that you need to take into consideration, which is extremely good because the company is more or less into a commodity consumer play and not quite in a pure consumer play. So being debt free is very good. Very low debt, I would say. Not quite debt free, but maybe it will become debt free in a couple of years. Consumption growth is expected. Right now consumption is going through a slowdown, so even in this slowdown, Huhtamaki Papers is doing so well. So I believe over a period of time the growth in consumption would be much better in the next 2 to 3 years, and hence the demand for packaging papers would increase, and hence the sales and profitability of Huhtamaki Papers looks like going up. Raw material cost has reduced because of the lower, you would say, lower oil prices and lower metal prices and so on and so forth. Even the paper prices have not been that high, so for them to, I mean, take and buy and then mold it into packaging material. So all these combined, it comes out to be that the raw material cost has been significantly lower than what they were say 5-6 years back, and hence this company has come out of the blue and really have done well over the last couple of years. And it is a very simple business of packaging and providing packaging material to FMCG companies, and this is why I like such businesses rather than looking at complicated businesses in which you have to really go through the balance sheet and profit and loss accounts on many fronts in order to understand whether the business is doing well or not. Huhtamaki Papers is a very simple business to look at. If you look at the technicals of the company, the 200 DMA is at 231. So currently the stock is trading between 250 and 255. And I can tell you one thing is that the stock doesn't move a lot over a period of time. It just gradually moves up, which is a very good sign, which shows stability and less volatility for retail investors. Uh, Strong support is around 226 to 235, so around that 230 levels is very strong support. So any declines to around 230, 235 is a very good buying opportunity. Even to 225 would be a very good buying opportunity to accumulate. 290ish level, where the 52-week high lies, is a big resistance, although the stock had earlier 2 3 years back had gone to, I think, close to even 350, but I think between 285 to 290 is a strong resistance, so one has to look at that. So if one has to trade, probably look at a stop loss of 247, which is close by, and trade to a level of 280 285 from here, which gives you 10 11% upside from here. And long term players can have a stop loss of 220. So if you want to accumulate, you can accumulate over a period of time, say over the next 6 to 8 months, with a stop loss of 220. So if you buy now, buy at every 6 7 rupees decline or 3 to 4% decline till around 220 225. Probably have a stop loss of 220 and wait and see how it does. I think the results would continue to be good. As I said, the consumption sector would pick up in the next 6 months or so for sure. With and even in such a desperate economy, Huhtamaki Paper is doing well. This is pretty good sign for the company. So what needs to be done? Probably invest as an SIP over a period of next 6 to 12 months, and wait for declines to enter. Do not rush to buy if it goes up sharply. Declines would come in, as I explained with the HDFC AMC video and so on and so forth. So declines come in on every stock. Wait for those declines to get into the company. It is a very good long-term bet, and by long-term I mean between 5 7 10 years. So around 5 to 8 years bet is a very good stock to buy and accumulate over a period of time, and you'll reap very good benefits. So have a 5 year view, but always have a stop loss when you are investing into any company, which especially which is small and mid cap, and put only 5% of your total money when you're putting in money into stocks which are small and mid cap. So this was my video on Huhtamaki Paper. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.